So in this piece, as always, it's Market Watch, and we've timed it really well. I'm recording this on the 2nd of August. Yesterday, the Bank of England finally, after 14 rate rises and then a whole year of plateauing at 5.25%, they came off the fence. We didn't know we thought it was going to be close. I said it last month that don't be surprised if they held off yet another month. But they did come off the fence. Man, it was a close call. 5 votes to 4 in favour of reducing the Bank of England rate by 0.25%. We're now at 5%. So the floodgates opening, does that mean rates are going to drop month on month now? Well, sadly, I'm going to be a bit of a spoiler here and say no, my view is not. Look, we all know how prudent the Bank of England are. So yes, they've taken, by the narrowest of votes, a decision to drop rates yesterday. But of course, that clearly means there are still concerns. The underlying inflation figures, that's around service sector, and it's around food, and it's around pay inflation. These are still being really stubbornly at a higher rate. So hence some of the committee voting to keep rates at the same place. So they're going to hold fire. Look, there's 3 more Bank of England meetings between now and the end of the year. My personal view is that next meeting in September, they'll hold it, and it will therefore possibly be at the November meeting that we'll see yet another reduction. So my view is between now and the end of the year, we'll have a total of 0.5% reduction. So we'll be at 4.75 by December. So in terms of a mortgage rate forecast, and I said it on my last update in July, that lenders were just starting to reduce their rates, and that continued across every single bank, every single building society over the last 2, 3 or 4 weeks have been cutting rates by anything from 1/4 to Barclays were the most significant at a 0.7% reduction. So here's the thing, the rates you are seeing right now, if you're getting research sent to you, if you're looking on the websites of different lenders, the rates you're seeing today are pretty much the rates you're going to be getting for the next few months. Do not expect another 0.25% off your mortgage rates because of the decision yesterday. It's already happened. The lenders blinked first. They started reducing 2, 3, 4 weeks ago. So what you're going to see is what you're going to get. Look, of course, there's going to be a small amount of manoeuvring to either be at the top of the league tables or wherever they want to position themselves. But in terms of significant savings, you're already seeing those rate reductions starting to come through. So the takeaway message is nice and simple. If you have been sat on your hands, sat on the fence, now's the time to get off them, because the rates you're seeing are the rates we're going to get for the next few months. And I don't expect another rate cut and hence further savings on mortgages until well into the autumn. One last point before I end this section, and I have said it a few times. If you listen to me every month, you'll hear me say that although the overriding inflation figure is at 2%, we are expecting that high-level inflation figure to start to rise over the next month or two. It's planned, it's expected, it's not a shock to the Bank of England. It will not change anything I've just said. So don't let any of the social media or other commentators, when they see the overall inflation level start to rise slightly, that things are getting derailed. That is not the case. It is expected. It will drop again, and the Bank of England are expecting it, so it does not change their plans.